following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more into the breach do we go, dear friends. And, of course, another day, and we're up 8 points on the S&P cash. Volume continues to be rather tepid. I would not be surprised to see a pullback into the close today, as we had yesterday. 2.1 billion shares at 2148. The beige book just came out. It was a lot of, man, I'm going to call it nothing. It was a nothing burger. As I forget the guy that says that on Shark Tank. It was a nothing burger. He's got all those funds now of he's got a fund of his own now. He's always hawking on CNBC. I'll remember his name here in a minute. Anyway, 2148. We were at like 2147 when the beige book came out. No real volume. No real spike. Again, kind of a nothing burger. If anything was news today, it was probably the very low rate of new housing builds. Permits were up a bit for next month. In-housing can be lumpy, but it wasn't a welcome sight to see housing numbers down that low. But it at least indicates that probably we're going to see lower GDP into this next quarter continuing. See if there's anything else really exciting. Everything else you probably already know about. Intel whiffed, and the stocks went with it. And I don't know if you can say a great deal more than that. Everybody was about as bullish as you could get going into this. I thought that there were elements, extreme elements, that were ripe for the picking. One of those in the Tech Insider was Western Digital. We shorted it at $59. I think $59.50 is where I got my fill. And I covered it under $53 today. It is going into earnings next week. It looked very weak. That STX or Seagate didn't really blow up. It already had come down. Told me that everybody was probably too short it. I'm hoping we get a bounce and I get to reshort it again. It's one of those companies that, inevitably is going lower as they get into a business that they will eventually lose. But I don't know what else you can say about it. So feeling pretty good. Took a nice profit in Western Digital today. Took a nice profit on, what was it, Monday in the daily newsletter with the puts on the IBB, which what do we do? 670 and out at probably $30 plus. I had to actually execute. In fact, I forgot to bring that up. I'll bring it up a little bit later out there, but I actually had to execute my puts because the rotten SOBs that were the market makers for that had stood back and wouldn't give a fair market price for them. Maybe we'll get into that later. You can puts and calls. You can actually force people to exercise them. And I always think that since I used to get those, how interesting they are when someone actually puts it to you. But as always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And, of course, it is options expiration on Friday. We've got some kind of political thing going on tonight. I've heard they've had a few before this. I'm going for a hat trick because I've missed two. If I miss this one, I will have missed all three. Maybe I get a special award for not playing in with their silly games. I did get a bunch of emails that revolve around politics, and I will just tell you this as an aside. I don't know. I always go back to the Clint Eastwood movie, the Western, where there was absolutely nobody that had any redeeming qualities whatsoever. The prostitutes that hired the assassin, the sheriff that was mean and basically tortured his prisoners, the town folk that did nothing and said nothing. I don't know. I think that there's enough blame to go around, and maybe we should just curse everyone. That's the way I feel right now. Anyway, what else do we have on? Yeah, it was a kind of a strange movie. How many movies where there is absolutely nobody that is redeemable or a hero? Everybody is wearing a black hat of some kind. But that's probably why that makes that movie so well and so good. What else do we have going on out here? Oh, we got to have our history to start the show. I almost forgot.
And it's all just a little bit of history repeating.
On this day in 1987, Wall Street takes its worst plunge of the modern era. The Dow loses 508 points, or 22.6%, the worst daily loss on record, to close at 1738.74. Traders on Wall Street's equity desks sit watching the ticker in shocked, dead silence as it plunges faster and farther than anyone alive has ever seen. By day's end, more than 500 million shares have changed hands, and traumatized analysts that are predicting a severe recession on the backs of it. And if, I really wasn't into trading at that time. I did watch the news and paid a lot of attention to it at the time. Didn't know that years later. But, of course, there's some famous footage. Maybe I'll have to dig it up sometime. That, of course, was way beyond or before the days of, maybe 20% of shares at that time were electronically traded. A great deal of them, of course, were hand-to-hand. And there's some famous footage where the market makers at New York Stock Exchange, at that time, they'd get a phone call. The phone would ring. They'd pick it up, sell, 500 IBM, buy 200 IBM at such and such or market. They had all these little pieces of paper, and they would run around with it. And guess what they did? They just sat there and stared at the phone ringing. They didn't even bother to pick the phone up and try to take an order or try to do anything. And I think that was kind of the end of that era, when we knew that if they could pull a weaselly, skunk-like stunt like that in 1987, it was the flash crash of the telephone era, and pretty much introduced much more of a market that had a lot more to do with buyers and sellers being able to come in at will. But on this day in 1987, the worst loss ever, and in October. And we shall move on. If you did not, were not in the den earlier, we were talking about China's issues in the 8 o'clock hour on John Logan's show. I posted this. We will get back to it, but China is selling our treasuries, and in a big way. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And one of the things that I felt was the most important news item of the day was this. China's holding of U.S. Treasuries fell to the lowest level since November of 2012 as the world's second largest economy draws down its foreign reserves to prop up its yuan, not Juan Valdez, the dollar-like thing that they have. The biggest foreign holder of the U.S. government's debt had $1.19 trillion in bonds, notes, and bills in August, down $33.7 billion from the prior month. Biggest drop since 2013 to the U.S. Treasury Department data released on Tuesday, and in Washington and previous figures compiled by Bloomberg. There is evidence to suggest that they are continuing to sell, and that has a lot of people worried. When we look at the TLT today, it is flat. When you go back into the dollar, it's up a nickel. Dollar index is up a nickel. There's no sign to me that this dollar does not want to go out and make the third test of 100 here in the very near future. And, of course, it'll either fail there or, of course, it'll break out. So we kind of have one of two scenarios to look at. I would not want to be long previous to that $100 test on the dollar index. What else do we have going on out there? In the meantime, I don't know. Everybody's just fiddling as Rome burns. But still on the bond market, there's a change. And I called FINRA today. They have not gotten back with me, but normally they do within a day or two. The Securities and Exchange Commission has approved FINRA's proposal to require its members to report transactions in Treasury securities to FINRA's Trade Reporting and Compliance Engine, TRACE. FINRA is set to do this starting July 10th, 2017 as the implementation date. This goes back to the flash crash in in 2014. I had the whole thing in the date and the press release here. It is kind of ambiguous as to whether or not humans like us are going to be able to get a hold of this data, or if it will only be to kings and queens that we elect. But it's uncommon. but at least we're getting the first step through the door of transparency in the bond market. One of the reasons why I hate just playing the actual ETFs around this, there is no real reporting to give you a view of this part of the financial marketplace. But at least the Fed and others will have access to this data. And if it's anything like FINRA has done in the last few years, they generally do it for a year or two and then make it available to the general public on their website. So maybe we're going to get a little bit of transparency in a rather opaque business of bonds and treasuries. It is a mad world. So we're just going to get into some of the things going on out here. The first thing I wanted to look at was Intel. I'm going to give it the loser horn today, even though it wasn't that big of a loser out here. Where's my loser horn? And today it is the big gap down. People didn't really like their forward guidance. The numbers weren't so bad. It looks like a lot of their new stuff is not going to be in this next quarter. And I think the price that Intel was trading at basically included a lot of their new technology that we've been talking about, that it's not going to be for sale until the first quarter of 2017. Put the kibosh, that's a technical trading term, on higher prices for Intel and putting pressure around the marketplace. One of the things is, of course, business causes more business. And the thought is that a lot of the server business that they were hoping to pick up on this will be put off about 3 months. And a lot of people seeing this stuff coming, knowing it's coming, being told and shown demos of some of this new stuff will put off sales until the first quarter. My guess is that this may be a buy again come January 1st if this stuff starts rolling out the door. They've got kind of samples and some low volume people using it, but it's just not there yet. But you have kind of a nice high out here. Looks to me like we're going to get right back into the $34 region on this in the next few days. Got lots of volume out here, and nothing really to change the story behind PCs, servers, all the other stuff that Intel's involved with. And again, a pretty big manufacturer of memory. And I think, as we said yesterday, I think Samsung can put pressure on just about everybody that is a supplier of memory. Companies that use a lot of memory probably a little better off, like anybody making a smartphone, Apple and those folks, probably going to be able to get a deal on memory. And Apple does use Samsung memory. So there may be, until they get the next big phablet out, probably going to continue to see a lot of chips sitting around looking for a home. And I just think that I'm not predicting the end of the world in the semis, but I do think lower. What else do we have going on out here? I had this stuff going on. Hang on just a second. We need to get to the ones that have been moving. And I thought I had that up, and I didn't. So let's go back to the pre-debate movers that have absolutely nothing to do with the debate. We will get into those. Intel, of course, the first one on earnings. We have Cree. I need some Jeopardy music here when everything goes slowly and things aren't going the right way. Can we do that? There we go. Cree. It, of course, has been one. I'd been short this in the Tech Insider back up when it was in the $64 range. Another one that it's very hard to see how this does not go down into the $10 range. Unfortunately, everybody and their dogs always short this thing, and you have to go through a lot of pops and drops to get out the other side on it. They, of course, are the maker of LED lighting. It was very hard to see their story, kind of like Tesla's story, that it doesn't one day become a commodity. And that's exactly what happened with Cree, one of their big competitors. Plus, he had figured out a way to put and make LEDs off of silicon, not using sapphire. And a sapphire ingot was about $700, and a silicon ingot that could replace it with Plessy's new technology was like $30 to $60. Didn't tell you a whole lot of thing that there were going to be a lot of cheap LEDs coming this way in the near future, and that's why we were shorting it in the Tech Insider, whatever it was, a year and a half ago, or 2 years, whatever it was. I like to short things at the top. I don't like to get it down here in the mired where everybody is shorter than the Dickens, and you have to. It becomes problematic to short things at lowers. You get blown out a lot of times with short squeezes. But down, it's breaking its previous low with May 12th, the low of 1.5 million with 9.3 million. I think that tells you everything you need to know. Lower prices to come. Be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Man, bear, pig. Did it get any better on South Park than that episode? Hard to say. Google it if you're unfamiliar. Netflix, nice gap, a little bit of continuous out here. As we reported on the Power Trading Hour over the last few days, 23 million shares short. This is why you don't want to be in a stock on the wrong side of these things when the squeeze starts. Another reason why you can see a stock that you know is going to fall apart one day. And guess what? You have to sit there through unimaginable pain waiting for the magic payoff. This is another one that's always got 25% of the shares every day that are being shorted. Everybody knows this thing is going lower. The question is just when does that last bit of straw hit the back of the proverbial camel? In this case, a little bit of volume back up into this gap down. No real clear signals yet. My guess is it will come out of the blue one day, and that will be it. But going into a gap down that had 4.7 million shares on the 6th of October, and we got 4.6 today, and that was a 4.7 move down. So, is it just kind of wishy-washy out here? The answer is yes. A tough one to figure out. Eventually, you'll get it right if you have the patience. As they said in the, Crusader? The Last Crusader? I think that was the movie, wasn't it? Only the penitent man will pass. And boy, will you have to have the patience of God to get this one right. But if you do, get it to $40 eventually. What else do we have out here? Question about from my email about WDC. What did I see in this? We've been talking about all these stocks that had come right up and spiked their previous gap downs that started these big moves. That's what I liked in Western Digital, plus the story and a short squeeze where everybody was, all the shorts that were sure this was going to fall off the turnip truck almost immediately, finally got out. Most of the shorts were out of this. You could see each day them doing it. The volume kind of tapped off, but basically you had some nice volume down days going back in the end of 2015. And that's what we got up to. We did so. It spiked. It reversed. And knowing their business as well as just about anything, being able to see what disk drive sales were like. And in fact, today, just saw another article from Newegg that they had 1 terabyte SSDs for $130. So the advantage of spinning drives is soon over. Western Digital bought a memory company to try to keep up. The problem is that they are not a memory company. They really need to be selling huge amounts of memory to get the price right. They will never do it. This is a stopgap measure to make it look like they're still in business. Will they still sell spinning drives? The answer is yes. The question is, how much money will they make off of it? And the answer is every year it will be less. The advantages of memory-based drives, especially the new technology that'll come out next year from Intel and Micron, makes me think that Western Digital will be on the ash heap of history sooner rather than never. I didn't say sooner rather than later, just never. It may take a couple of years, and Western Digital and Seagate will both roll over. Seagate did come out with the news. If you missed the beginning part of the show, I said that we did cover our short in the Tech Insider from $59.50 or so to $53 today. I think it's headed back down to $34. That's Western Digital. It's just going to take a bit. They've got earnings next week. They're pretty good at rolling the bovine excrement, and a lot of people are trying to help them out on Wall Street, trying to get new homes for those shares that they own. Seagate basically came back down to this gap up. The gap up happened on 9.5 million shares on the 7th of September. Got back into it with 7 million shares on the 13th. Today, we're into it with 7.5 million shares. Could the wheels fall off the wagon? It could get you right back down to the $25 level. I'm pretty sure that this is where it's going. But my guess still is that you will find hang on a second. just a crude close announcement. What else do we have? That $25 level is probably home where Seagate is going after earnings. And again, it doesn't take a great deal to know that these companies are the buggy whips, and horses and buggies are headed out the way of the dodo. What else do we have on my list of stuff to get to besides emails? I think I've got most of them. 2146 on the S&P cash. I would not be surprised with the crappy volume we have today that once again we close below 2140. I would say a preponderance of the volume today is in the indexes and in big ETFs. Very little, if any, volume in the actual equities themselves. That's always a pretty good indication that you've got somebody really pushing hard on the market, and the market is not moving along with it. Do I have time to do it? Give my market call. I'll do it in the next segment. But I'll talk about what I think is happening and what will be happening in the near future. Got another email, wants me to look at IBB. As we said on Monday, we had the 295 puts in the newsletter. We bought them at like $6.70. I executed it out above $30, so one of my biggest winners of the year. And what are we going to do with that? Well, we got to wait for a bounce. The question is, will it get back up to the place I need to get back in this? My mistake, if you can call it a mistake, making what, $6.70 to more than $30. If you can call my mistake a mistake, my mistake was not getting these and having them go out until November. I thought that I think I got them early part of September, and I was pretty sure that, I was probably a couple of days away from them failing. They kind of just hung out there in that 290 range for about 5 or 7 days longer than I thought. So I'm already thinking that, we'd be down into the 250 range now instead of the 260 range. So I went ahead and took the cash. I will wait. But, if you could get to 280, maybe to 285 on a nice bounce, I might be able to pull the trigger yet again. But normally when I do this, you know what? The market never gives me another chance to get back in. I see nothing in here that says that we aren't doing it. The energy off the top is absolutely horrific compared to the energy on the way back up. If we look at the June 27th low of that 240.23 to 301 on September 23, we've already got that all that energy, all that time already has come in through the low of Monday. So, man, you're kind of bucking the trend here if you don't think that the sellers are in the IBB. We'll be back shortly.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
I had a question in the den. I want to answer it first, then we'll talk about my market call, at least for what I see here in the coming weeks. The question was about my IBB puts, buying the 295 puts and covering them on, or selling them on Monday for a fairly big, move. It's $6.70 to over $30, depending on where you covered them or sold them on Monday. That sounds absolutely monstrous. And the idea would be, okay, I just have to put all my money on black and bet. And that is where you really have to wander, or you have to wonder about what you're doing if you're not, and you don't really understand, one, options, and two, trading. But I repeat this once a week. Options are to reduce risk, not take more on. When I trade one-sided option positions, the idea is to reduce risk, not take more on. So if your risk-reward formula would have you taking a $15 loss on a $250 stock, you figure out what that loss is, and you shouldn't buy any more puts than that. So let's say that I was going to play a stock, and I was thinking, hey, I might lose. I'm going to stop out at 265, and I would lose that amount of money. How much money is that? Whatever it is, that's what you can buy in puts. Your risk-reward scenario doesn't change just because you're playing options. It just means that you should really understand that you don't want to take more risk on. Options are a way to lose a little and maybe lose half the time. But when you win big, like the IBB trade out there, when you get $30 for $6.70, what do? Well, that covers your losses. I'm going to have one this week. I don't think of it as a big deal. I'm probably going to see some VIX options go expired and see them expire worthless, and I'm going to lose whatever it is, $1.40 or something. But the last time I played the UVXY, I made $6. So if you can one time lose and lose low, and the next time win huge, it's probably the best way to go to the palace and not the poorhouse. It does mean that your batting average is going to seem a little poor, but it is the opposite of trying to pick up pennies in front of the steamroller. You are trying to pick up at least gold bricks underneath it, and I would say that you don't have any arthritis doing it. But again, you have to, at least my model has a few things in it. One, the underlying volatility has to be below 30% on the index. You've got to see an overall VIX rating pretty much under 14. Once it starts getting into the 18s, the chances of you making money are pretty poor. In fact, some of the biggest money we've made in the path of least resistance has been in this biotech sector. We had the BIIB when the thing cratered like 60 or 70 bucks. So these things, when they do fall, if you can get it and make sure that your loss is minimal and your chances of winning are maximum, but overplaying them and actually taking bigger positions is the road to ruin in options, not the road to making a ton of money. Because you are going to lose, and if you can stand losing half the time, but winning 3, 4, 5 times, if you're a good trader, you can have a good thing. But a lot of people can't. They've got to make money every single day. They have a mindset that they are working for a daily wage in the stock market, and I have to thank Nassim Taleb for getting me out of that mindset. That it didn't matter if I lost 10 times in a row. If the 10th time or the 11th time I made 100 times on my money, I would sign up for that every day if I could. So just understand asymmetrical trades, understand that options are not to put on more risk. They are to limit your risks. So a very good question. Hopefully that answered it. Somebody's asking if I see my IMs. No, I don't. We have Sam from San Jose, California. How you doing today, Sam?
I'm doing good. How are you?
Pretty good. I hope you weren't waiting too long.
No.
Okay. What can I do for you?
I want to find out what do you think about First Majestic?
What's the symbol?
A for Adam, G for God.
Well, you are maybe getting back up to this $10 level where this gap happened. What are you thinking on it? You want to buy it?
Yeah, I've been watching it for quite some time, and then I was thinking about buying it. It looks like it's putting in some kind of a bottom.
Yeah, where are you thinking it's going? $10?
Oh, yeah, I mean, around from 10, 12,
Yeah, to me, you just completed the second or the big part of an ABC down. So you're either probably going to go sideways for a while or maybe have a little bounce. My guess is that it's going to be trapped between this $8 and $10 level for a while, though. Let's check back in. Did you catch my show, what was it, Friday or Monday? I think it was Friday. We were talking about gold fields out here. Goldfields had a really good-looking Gartley. I like this pattern much better than I did the pattern you're looking at.
Okay.
Are you watching on Tiger TV?
Yes, I am.
Okay. This is one where the energy didn't increase in the C to D leg. It actually decreased. Okay. This could get back up to 740 or not 740. It could get back up to 575 or $6.56. I'm not a big bull fan of gold here until the dollar index tests 100. But if I was going to play a gold stock, this would have been the pattern I would have played. This thing's still kind of down in here. You might get one more opportunity down in the low $4 range to buy it. But on this one, the energy from the X to A point, the May 25th low to this A high on August 5th, had all kinds of energy. You pulled back on lighter energy, popped a little bit into the C point in September 8th, and then came down to the October 12th low. But to me, that pattern is probably 10 times better than the one you're looking at least in charting.
Understood.
So I can't say that gold won't go higher. It's always a percentage basis. I know we've got nothing but a room full of folks that are gold bulls. To me, the better bet would be a wait for the test of the $100 on the dollar index, and then look at it. Normally, this is the absolute best Gartley pattern I've seen. You want to hang through the break?
Sure.
Okay, we'll be back in a second.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special 1-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 1-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long, short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Hopefully we're back with Sam from San Jose.
Yes,
Are you there?
Yes.
Oh, okay. Are there any other gold stocks you're looking at, or are you pretty much fixed on AG?
No. I was also looking at Yamana Gold, which is AUY.
It's AUY, right?
Yes.
Yeah. Okay. Well, of the two you picked, I kind of like this one a little better. You had some nice consolidation out here for the I know this is a big dog and it has been for a long time, but I at least like this thing going sideways for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. That's a pretty good sign out there that you've had a bunch of opportunity for people to sell out. You've got a gap down here. What is that? About $4.20. So maybe you make 30, 40 cents out of it. Again, I think the big money in gold is going to be after you test 100 and if you get a failure on the dollar index for 100.
Okay.
As long as I continue to see a dollar that does not pull back, what is it right now? 79.72. So it's up 3 cents. This thing came up here, had everybody, I was watching on the financial infotainment shows, everybody, the dollar's over, and it hadn't moved, which makes me think, we're close enough to that $100 mark to get the third test of that high. And I think that's what we do. I think we go up there and test that. I would be on the side of thinking we break it, but I'm saying that may be just a 51-49% deal, right? I may just be leaning over that line of it, breaking it a little bit, not enough to throw money at it, but certainly thinking that's more probable, but not enough to bet on it. But my bet would be that we do test the $100 level on the dollar index, and very soon. I don't know what's going to happen. I think, in fact, I didn't get a chance to go to my market thing. Thanks, Sam, for the call.
Sure, thank you.
Wanted to get this in with a couple of minutes left. I got some emails asking me what I'm thinking. I just don't see anything in here that makes me think that the market's going higher. Did we have one day where the volume was low? Yeah. Then we get 2 days where the market tries to go higher and the volume's still crap. 2.4 billion shares, almost. We haven't even gotten there. So there isn't a lot of juice. 2140 has set up the line that we had at 2165, which is every time we got to that level, the volume just fell out. And it fell out. It did for weeks. And everybody, is now regrouped and thought that 2140 line is it. We're going to get up to 2140, and then someone's going to buy all the stocks from us at higher prices, except all the volume falls out. We've seen that on yesterday and today. Now, can you make the case that everybody's waiting for some kind of magical thing that's going to happen tonight in Las Vegas, and tomorrow they're all going to prognosticate that the election is over? You probably could. I just don't see it. Options say that maybe you get 15 points higher. My problem would be that maybe somebody falls over the podium and croaks right then, or another one shows up with a Ku Klux Klan hat on, and there is no more indecision, and everybody actually has to say, okay, we can't avoid the market going up and down any longer. We're actually going to see a move tomorrow. My guess is that isn't going to be the case. Indecision will be back tomorrow, and my thought is that we could always pop 10 points or 15 points, but on the opposite end, we could go down 50 or 60. That keeps me away from the bullish stance. We'll see you tomorrow. Same bat channel, same bat time. Thanks, Sam, for calling.
Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com.
You're watching Tiger TV.